Hi guys, good morning. Hope all of you are doing really good. So we are starting with our second class of Forex now. And before I start with the discussion, I'll just give you a small summary of what we studied yesterday. Okay, so the first thing that we discussed was that we have two types of currencies. One we refer as base currency. Base currency is the currency for which price is given, and next is the price currency. Price currency is the currency in which price is expressed. If you remember, we use the pattern as price currency oblique base currency while writing. If you would have noticed that we have written all the quotations as price currency oblique base currency, that is, the currency for which price is given is written in the denominator, and the currency in which price is expressed is written in the numerator. I hope you realized that when we were discussing yesterday. Okay, now after that, what we have discussed is how the currency quotations, especially of rupee and dollar, will fluctuate. I gave you reasons for that. I told you the biggest contributor to the fluctuation is the crude oil prices. So suppose if crude oil prices will go up for any reason, if crude oil prices are going up, then in that case what will happen is that the price of dollar will also go up. Sir, why? Because crude oil is purchased in dollars, so price of dollar will also go up. If dollar price will go up, then people who have invested in Indian equity markets, that is FII, will start selling, and if they sell, then equity markets will start going down. When equity markets will start going down, people will start investing in gold, and accordingly gold prices will go up. That is the common relationship. And obviously, as I told you, what happened recently, the coronavirus, that is an exception. Even if crude oil prices are going down, dollar is still appreciating against rupee, and equity markets are still falling, and gold prices are going up. Why did that happen? Is because I told you, in times of a pandemic like coronavirus, there are less number of there is less consumption in the businesses. Accordingly, the slowdown in the business has happened, and whenever any such big mishap will happen, then obviously FII will prefer to take out their money from equity markets and try to put it in safe investment avenues. Safe, when I say safe, safety, maybe you can say fixed deposits or even buying gold. These are the safer options, or just keeping money in the house. That is the safest option at this point of time. Okay, then we discussed who will be exposed to transaction exposure. You remember I defined two types of exposure. One is transaction exposure and the other is economic exposure. Transaction exposure will arise if three conditions are satisfied. Number one, there is a cross-border transaction. Number two, there is a foreign currency invoicing. And number three, the date of transaction and date of settlement are two different dates. If these three conditions are satisfied, only then you will be exposed to transaction exposure. If any of these conditions is not satisfied, there will be no transaction exposure. But does that mean if one of these conditions is not satisfied, you will not be bothered about the currency market? Answer is no, sir. I will still be bothered about the currency market. Just what happens is my transaction exposure gets converted into economic exposure. If you remember, I gave you the example of Mr. Sam and KP Industries example. You have to remember that particular example. Next, we discussed how many types of exposure you can have in the currency market. The answer is two. One is you can have a foreign currency payable, or you can have foreign currency receivable. Very clearly we discussed, in payable there are two parties, in receivable there are two parties. Payable, we can have an importer or we can have a foreign currency borrower. Receivable, we can have an exporter or we can have a foreign currency investor. So there are total four situations possible. Exposures are two types. Situations are how many? Four. Two of them are worried about foreign currency appreciation. Two of them are worried about foreign currency depreciation. If you remember, we discussed this, that if we have payable, I told you learn like this. Payable is a liability. We all are afraid of liability going up. So whenever you have a foreign currency payable, next time whenever I ask you, you should think like this. Sir, we have foreign currency payable. If we have a foreign currency payable, it means we are having a liability and we are afraid of liability going up. Clear, no? And if we have a receivable, receivable is an asset and we are always afraid of asset going down. Okay, we are afraid of asset going down. So whenever you have foreign currency receivable, you will be worried about your receivables going down. That is, foreign currency depreciating is what you are worried about. Guys, if you remember, then 3 cases we discussed in details and we were left with the last case, which I told you I'll discuss in my next class. The last case is the foreign currency investor. Now, foreign currency investor is similar to foreign currency borrower. You remember that HDFC and Citibank example we did previously. I took a loan from Citibank at 4%, but I suffered a cost of 10% because of dollar appreciation. Similarly, we are talking about an Indian investor who is planning to invest in US equity markets. Now listen carefully. You are bullish on the S&P 500 index. Bullish means expecting upside. That terminology will be used a lot in equity markets. Bullish means expecting upside, optimistic about markets. When we say we are bullish about equity markets, it means we are expecting markets to go up. When there is a trade war between China and US, when there is coronavirus, or when US has killed one of the leaders of Iran, claiming that he is a terrorist. You remember that happened few months back. These times you become bearish on markets. Bearish. Bull and bear are the terms used. Okay, and that is why you see the image of a bull is given here, because we are bullish. And what is an index? It's a representation of stocks. A representation of stocks. A representation of stocks. I'll talk in more details, don't worry about it. A representation of stocks. So Indian investor is bullish on the overall S&P index. S&P is a US equity index. Do we have index in India? Yeah, we have index in India. The two famous index are Sensex and Nifty. Index will represent stocks listed on the exchange. Index will represent stocks listed on the exchange. So Sensex is an index which is maintained by BSE, Bombay Stock Exchange. So Sensex is a representation of stocks which are listed on BSE. Don't worry, just understand what I am saying. All this is given in the book and this is for your knowledge purpose. I will take a separate session on this where I tell you the framework of Indian equity markets. Don't worry. Right now I am discussing all this because this is part of my discussion. You see those words written, so I can't just proceed without letting you know the meaning of those terms. Detailed analysis we will do. Don't worry. Everything will be discussed in great details. Okay. Nifty is an index of NSE, National Stock Exchange. Exchange name is NSE. Exchange will have an index which is a representation of the stocks listed on that exchange. So Nifty is an index maintained by NSE, National Stock Exchange, showcasing the performance of stocks which are listed on NSE itself. Will it take all the stocks in the exchange? Answer is no. It will be taking limited stocks. I'll tell you last thing. Sensex is made up of 30 stocks. Nifty is made up of 50 stocks. Sensex is made up of 30 stocks. Nifty is made up of 50 stocks. Stop it over there. I'll come back to this. Today itself I'll teach, but not now. Let me focus on my Forex right now. This framework of Indian equity markets I will discuss after some time. Give me some time. I'll come back to this part. Okay. So there is an Indian investor who is expecting US equity markets to do well. Okay, there's an Indian investor who is expecting US equity markets to do well. Okay, so what he decided, investment horizon is 1 year, he decided to invest in US equity markets. So what will happen? He's a foreign currency investor. You can write here, this is the last case, last situation is foreign currency investor. Foreign currency investor. Okay, so he is a foreign currency investor. What will happen? Please write, suppose return from US equity market is 15%. Suppose return from US equity market is 15%, and during this 1 year, dollar appreciated by 10%. If dollar appreciated, guys, if dollar appreciated, is that a good news or a bad news for us? That is obviously a good news for us, because when we are foreign currency investor, we have dollars receivable, then receivable is an asset for us, and obviously we will benefit if the asset is going down. So dollar going up by 10% is actually a good news for us. Therefore effective return is equal to 15 plus 10, which is 25%. Effective return is equal to 15 plus 10, which is equal to 25%. But I told you we don't do simple addition, rather what we do is, or 1.15 into 1.10 minus 1. What we do is the compound effect. I think you will get 26.5%. 26.5%. 26.5%. So what is the conclusion? In case of foreign currency investment, effective return is made up of two components. Number one is return on asset and plus foreign currency appreciation. If foreign currency appreciates, that is a good news for you, minus foreign currency depreciation. That is how your return is computed. Okay, if you come to the next page, now we are discussing how the exchange rate quotations are determined, who will decide it, what is the structure of the market in India. These are the things we are going to discuss. The basics we have discussed. Okay, now we are going on, the basics are still continuing, but now we are moving on with the discussion that how the quotations are framed, who has the powers, what is the framework of the structure in India of the forex market. Okay, so understand one thing, the market is regulated by RBI. RBI regulates the currency market. SEBI regulates the equity market. Equity markets are regulated by SEBI. Similarly, currency markets are regulated by RBI. When I say regulated by RBI, does that mean RBI will determine the exchange rates? Answer is no. Exchange rates are determined by demand and supply. Exchange rates are determined by demand and supply. If there is more demand for dollars, see, if you remember yesterday I told you something. I told you that if crude prices will go up, you will need more dollar to make payment for those crude oil supplies. Correct? No? So when you buy more dollar, automatically price of dollar will go up. If you buy more rupee, price of rupee will go up. It's a simple demand supply, what we have learnt in economics. Okay, so based on demand and supply, we will see the fluctuations in the currency market. It is not that morning RBI will decide today we will keep rupee per dollar at 71, tomorrow morning they decide mood is good, we will make it 70. Not like that, guys. Okay, be very clear about it. All the financial markets are purely determined by demand and supply. All the financial markets. Okay, So in the currency market also, depending on what demand we have for dollar or for any other currency, depending on that the price will be determined. Okay, so RBI will only regulate this market. When I say regulate, it means it will monitor the market, and from time to time it will issue some guidelines. Those guidelines have to be followed. But below the RBI there are authorized dealers. RBI, then authorized dealers. What do you mean by authorized dealers? Authorized dealers are RBI registered dealers who can deal in currency. They can deal in currency. They can become the vendors. They can become the sellers or the buyers of currency. They can become the traders in currency. They will be able to trade in currency. Trade in currency means they will be able to buy the currency also, and they will be able to sell the currency also. Like few examples I am giving you. Matrix is a company which is RBI registered dealer in India. Another company is Thomas Cook, like I told you yesterday. Another company is Western Union. These are the places from which you can get the currency. Another example is Centrum, CENTRUM. So these are the financial houses from which you can involve in currency dealing. Okay, you can buy the currency, you can sell the currency as you wish to do, but they have to be RBI registered. Okay, so RBI will only regulate the market and it will frame the guidelines from time to time. Okay, RBI guidelines are available, but RBI will not decide the currency quotations. Currency quotations are purely determined by demand and supply forces. Okay, I hope you are clear about this, and I will discuss certain more things afterwards. Let's first read the notes. RBI regulates the currency market in India. Point number 1 I am reading, guys, on page number 7. It has appointed authorized dealers, that is currency exchangers and banks, to provide the currency quotations. Suppose SBI has provided the following quotation for dollar, that is rupee per dollar is equal to 64.50 and 66.25. So what you see here is two quotations are given. There are two quotations, 64.50 and 66.25. So let me first explain you what does this mean. This means that when SBI is giving you a quotation, it is offering you basically two different rates. Firstly, they are giving a rate that if you want to buy dollar, you means customer, if you want to buy dollar, then SBI is asking you to pay 66.25. Okay, you got my point. If you want to buy dollar, SBI is asking you to pay 66.25. Similarly, if you want to sell dollar, then SBI is bidding to pay a maximum of 64.50 per dollar. Okay, listen to my language. If you want to buy dollar from the bank, if you means customer wants to buy dollar from the bank, then SBI is asking for 66.25 rupees. But if you want to sell dollar to the bank, then SBI is bidding to pay you 64.50 rupee per dollar. Okay, which means in the given situation SBI is interested to take two positions with respect to dollar. Okay, why are we focusing on dollar? Because dollar is the base currency. It is the base currency for which price is given. So we should always focus on base currency. So for dollar we will have to pay 66.25, and we will, for selling dollar, we will get 64.50. Who are we? We are the customer. So if we look at things from bank's perspective, SBI is asking for 66.25 against every $1, hence it becomes the ask rate, and at the same time it is bidding to pay 64.50 for $1, hence this becomes the bid rate. Okay, but see, in exams most of the sums we will be doing for a customer who is an importer or a customer who is an exporter. Most of the times we will be doing a sum from the customer perspective. So what I recommend is that you start thinking from customer point of view and not from bank's point of view. It is recommended to think from customer's point of view, okay, as we will be solving the problems for the customer. Accordingly, in the given case, customer can buy dollar at the rate of 66.25, that is ask rate, and customer can sell dollar at the rate of 64.50, that is the bid rate. Okay, and obviously we know this, that ask rate should always be greater than the bid rate, because obviously bank will take more from you, only then they can make some profit. So ask rate should always be greater than the bid rate, and difference between the two will represent the spread income for the bank. The difference between bid and ask, we refer to it as the spread income for the bank. Okay, spread means profit for the bank. This spread will depend on certain factors. Once in exam they ask this question, what are the different factors on which the spread will depend? So I've given you space over here and we can write down the notes. Please write point number one. Point number one, higher the competition, among currency dealers, higher the competition among currency dealers, higher the competition among currency dealers, lower the spread, lower the spread. Higher the competition among currency dealers, lower the spread. There is nothing I need to tell you here, you know this very well. If there is more competition, then spread has to be lower, profit margins have to be lower. Clear? Point number two, higher the turnover for the customer. If customer is doing a lot of business with you, will you charge customer more or less? Obviously you will give discounts. So in such a case, lower the spread, lower the spread. Point number three, higher the currency fluctuation, higher the currency fluctuation means higher the risk. Higher the currency fluctuation means higher the risk. And accordingly spread will be higher. If risk is more, obviously the banks will charge you more spread. Higher the currency fluctuation means higher the risk, and accordingly spread will be higher. Guys, I hope this part is clear to you. So for 2 marks they might ask you this, and you can write these 3 points. That is more than enough. So practically whenever you go to the bank, you will get 2 quotations. One is the bid rate, one is the ask rate. Ask rate is the rate at which customer can buy, bid rate is the rate at which customer can sell. Practically always 2 rates will be given to you, but in exam sometimes you might get lucky and you may be provided with only single quotation. Why are you saying this, sir, that we might be lucky? You might be lucky because if single rate is given, you need not have to apply your brains. Whether they give you, whether you have to buy currency or you have to sell currency, you will take same rate. But if they give you 2 rates, then you will have to do a little bit of thinking, because whether I am buying the currency or I am selling the currency, depending on that, you will have to decide whether to take bid rate or you have to take ask rate. Okay, I hope you understood what I am trying to say. So practically, if you read the remarks below that, practically bid ask, banks will provide you bid ask quotations. However, in exam sometimes you might get lucky with single quotation sums. Okay, as I told you, in India the exchange rates are determined by demand and supply forces. In India the exchange rates are determined by demand and supply forces. However, RBI can intervene from time to time to prevent too much of volatility in the exchange rate market. What are we talking about here? Okay, this is again a practical stuff which you as a chartered accountant should know. So basically what happens is, as I told you, remember, see, what importer wants, what exporter wants, what foreign currency borrower wants, what foreign currency investor wants. These are things when we think from commercial angle. When we look at things from economic angle, Indian economy will always be better off if dollar depreciates against rupee. If dollar appreciates against rupee, then our imports will become expensive, our forex reserves will go down, we end up paying more for crude oil. These are the problems which we face holistically. Importer exporter, they are selfish people. So understand what I am saying. Selfish means they are self-centered, they are looking at things only from their business angle. But if we look at things from economic point of view, dollar appreciation is always bad for us. We are not happy when dollar appreciates against rupee, okay, or any other foreign currency for that matter appreciates against rupee. We are not happy. Now please understand what I am trying to say. RBI cannot directly change the quotation because the currency quotations are determined by demand and supply. But what RBI can do is, RBI from time to time can introduce certain measures which can put some control on dollar appreciation against rupee. So please give some examples. I'll give it. India is a very big importer of gold. Okay, gold, GOLD. India is a big importer of gold. So whenever gold imports we have to discourage, we will increase the import duty on gold. So when the import duty on gold will be increased, then what happens is, if import duty will increase, then the cost for the retailers will also go up. If the cost for the retailers will go up, then automatically what happens, people will be discouraged to buy gold, and accordingly in such cases the demand will go down. If demand will go down, then automatically imports will come down. If imports will come down, then obviously demand for dollar will also go down, and accordingly dollar prices will also come down, because if there is lower demand for gold, dollars, then there will be lower price for dollars. This is the strategy. Similarly, I'll give you another classical example. You remember yesterday I told you that India, United Nations have issued a sanction against Iran. Accordingly, crude prices went up. That time, India have put a special request to United Nations to treat India as an exception to the sanctions and allow India to buy crude from Iran. India have taken that special permission and they purchased the crude from Iran. At that time, what they went and they bargained with Iran that for the crude purchases they will not pay in dollars but they will pay in rupee. That is again a very smart move taken by Indian authorities. They said we will pay in dollars for a certain period of time, not for lifetime. For a certain period of time, they have told Iran that we will buy crude from you when nobody else is buying, but we will pay you in rupee, not in dollars. This directly reduces the demand for dollar, because if you can get your crudes and you can pay for it in rupee, not in dollars, there will be drastic fall in demand for dollar, and automatically price for dollar will also go down. I hope you understand what I'm saying. So these are some tactics, some strategic measures which RBI will take from time to time just to control too much of dollar fluctuation, too much of dollar appreciation against rupee. Okay, so let's read it now. RBI will take necessary measures from time to time to ensure there is no artificial hike in demand for dollar, as the same results in cost of dollar going up. Anything which results in unnecessary demand for dollar going up, whether it's import of crude oil or it's import of gold, whatever it is, we will try to put some restrictions. We means RBI will try to put some restrictions either by increasing the import duty or by entering into some strategic tie-ups where they will get crude for by paying in rupees or something like that. Okay, so these are the ways RBI can try to control too much of volatility in the market. But again, I am saying currency quotations cannot be controlled. Currency quotations are purely determined by demand and supply forces. If you go to the next page, we have the foreign exchange market structure of India. The foreign exchange market structure of India is in 3 tiers, and that we will try to summarize this with the help of a triangle depending on the volume of transactions. There are 3 tiers to this market. There are three tiers to this market. Okay, tier 1 is transactions between RBI and authorized dealers. Transactions between RBI and authorized dealers. Transactions between RBI and authorized dealers. Then we have tier 2 market, which is more like a wholesale market. We have transactions between authorized dealers. It's a wholesale market where transactions will take place between the authorized dealers. And then we have the tier 3 market, which is more like a retail market. Which is transactions between authorized dealers and customers. Obviously customers can be both retail customers or corporate customers, but the transactions are taking place here between authorized dealers and customers. Okay, so for us, what is the most important part of our discussion? So questions basically come from this part. Okay, questions come mainly from your last part, where we are a customer and we go to the bank for buying a currency, and few might come from tier 2 also, which we will discuss at the end of Forex, not now. But chunk of your discussion, 90, I can say 98%, 2% and 0, like that. So in real life also, RBI and authorized dealers transactions will be very, very limited. That is why tier 1 is very small. Then tier 2, some transactions are taking place in the interbank market. We refer to it, you can also make a reference here, interbank market. Interbank market. And then we have retail market, where chunk of the transactions, the most of the transactions are taking place. That is retail market, transactions between authorized dealers and customers. So basically what will happen is, we take the rates in the interbank market, tier 2 market, and then based on tier 2 market, some margins are adjusted. Some margins are adjusted in the tier 2 market rates, and based on that the rates of the tier 3 market are determined. Okay, how tier 3 market rates are determined? Tier 2 market rates are taken and some adjustments are made in that, and accordingly we figure out the tier 3 market rates. Okay, it's written also in the book, if you read below that, the exchange rates in the retail market, retail market means tier 3, are known as telegraphic transfer rates. We refer to it as TT rates. The same word you will find in direct tax also. The TT rates references are made when you are reading the proviso to section 48, okay, in capital gains chapter. TT rates are important there, because when we are calculating the capital gains for a non-residents, then TT rates are used for making conversions into rupee equivalent. TT buy rate, TT sell rate, those are telegraphic rates, that is the rates prevailing in the retail market. Okay, and are generated, these rates are generated from the wholesale or interbank rates by loading a margin to the interbank rates. Okay, these rates are generated from the wholesale or interbank rates by loading a margin. Okay, when you're studying the subjects, okay, abruptly I'm saying this, excuse me for that, but it's very important that I tell this to you. When you're studying the subjects, try your maximum to link the subjects. Some students ask me, I'll give you two examples. Some students ask me, can I do Forex and then I do equity analysis, then I do portfolio management and not follow the sequence you are using in the class? I strongly recommend that you study SFM starting from the first class which I have taken and going till the last class which I have taken, in the same sequence, in the same manner in which I have taught these chapters to you, because there is a heavy linkage of chapters. The chapters are not taught to you in isolation. Okay, now we are studying Forex, forget about everything else, only focus on Forex. Now we are doing derivatives, focus on derivatives, forget everything else. No, that's not how you study for CA final. That's not how you study for CA final. Everything is strongly linked. Not just that, you should not try to link chapters in a subject, you should try to link the subjects as well. Would you believe me, there is so much of linkage even in SFM and DT. Maybe not directly content wise, but conceptually there is so much linkage. What mutual funds we study in SFM, what securitization we study in SFM, okay, the concept of securitization we study in SFM, the taxability we study in direct tax. There, the bid and ask rates and all these things, what you study in Forex, the telegraphic rates, the TT buying rate, TT sell rate, all these have application in direct tax. Maybe not huge application, but there is some relevance. When we study DT, we make a lot of references of what we studied in SFM. This knowledge of exchange, how shares are purchased, how demat trading is done, all this has a taxability impact in section 45. How your taxability will arise when shares are held in demat account. What is a demat account? If you don't even know that, that topic will trouble you. And even in SFM, equity analysis will trouble you, derivatives will trouble you. So when you're studying, the linkage should not be done only among the chapters of the subject. We should take it to the next level where you are able to link across the subjects also. That is when you ask me, what is considered as a good level of preparation in CA final? This is considered as a good level of preparation at CA final, where you can link the subjects, not just the topics in a subject, but the subjects as a whole. That is what we should be striving for. Understand my point. You are today, when you're studying, you have a reason for studying. The reason for studying is to pass the exam and get a degree. A lot of you tell me, sir, first let me pass the exam. No, after that I will increase my knowledge. I'm not saying it's not possible, but I'm saying it's very, very bleak chances. The probabilities are very low, because once you start getting paid and once you're occupied with your work, chances are very less you will take out time to learn things. So rather than that, you should start enjoying the process now. Now if you enjoy the process, two things will happen. Number one, you will have sheer knowledge. Your knowledge levels will be good. And understand one thing, knowledge is power, boss. If you want to excel in career, knowledge is power. You need to make sure that you have everything at your finger ends. As a chartered accountant, I've heard people saying that chartered accountants are not paid as much as MBAs and all. All this is bullshit theory, trust me. I know people in my family, I know people in my surroundings who are chartered accountants, and at very young age they are making some good money. Very good money they are making. It's not like that. It's like, you need to understand, do you just want to be a CA or you want to be a potent CA, an effective CA? If you want to be an effective CA, then you need to understand that you will have to understand application of your studies. Not just have knowledge of the subjects, but have knowledge beyond a point where you know how to apply your knowledge in real world. That is when you will start making progress at a rapid pace compared to your subordinates or compared to your colleagues. Being a normal CA, then not being motivated on the work front also, you might grow, but maybe your growth will come at snail speed, and that is very, very irritating. I'm telling you, that's a big demotivation. Okay, so you take it as a challenge, especially this study time, whatever time you devote, 8 months, 10 months, 12 months, or you are like taking classes for 2 years in advance before your CA final. Okay, different people from different backgrounds, different mindsets are taking my classes. Some are going right, some are going wrong. It's my duty to bring all of you at par with each other. It's my duty to make you understand that you don't make mistakes which I've seen others making it, and then living a mediocre life. No, we don't want a mediocre life. We have done a course by investing 5 years for that, 6 years for that. So we want to make it count to the largest possible extent. And that's what I'm saying, that a CA is capable of doing really great in career. Your packages can be fantabulous, it can be mind-boggling, trust me on that. At the age of 30 itself, 28 to 29, 30 years of age, you can start making packages of 30, 35, 40 lakhs. That's a huge amount of money, right? So, but see, there are just 10% people passing the exam. But out of that 10% also, like say if there are 100 chartered accountants, or out of the 100 chartered accountants, maybe just 5% of chartered accountants are able to get a package of 30 lakhs plus at the age of 30. Rest are just that part of the crowd. They are just getting some 12, 13, 14, 15 lakhs after 5-6 years of experience. So where is the difference? Is it just people who are slogging in the office? Somebody is working for 8 hours, you will work for 14 hours and you will get the promotions. No, it does not work like that. You need to make yourself count is when you know how to apply your knowledge in real world. Having knowledge of SFM is so important, because it teaches you, this subject teaches you how to make money from money. This is the importance of this subject. Direct tax is a very important subject because it teaches you how to plan your taxes, how to file your returns. You will not be dependent on anybody. Nobody, tomorrow you have a business practice, nobody can come and make a fool out of you if you know your DD properly. If you know your IDD properly, you know how GST thing works, how input credits have to be taken, when returns have to be filed, what repercussions will happen if I don't file my returns on time. Costing subject will teach you how decision makings have to be done, whether to enter into a new business or not, whether to launch a new product or not. What is the cost involved? What is relevant cost for me? What is irrelevant cost for me? Every subject has its own significance. If today you start enjoying learning the subjects, number one, probability of you clearing exam will be very high, super high. Means clearing exams will become a formality for you if you are really enjoying studying your subjects. And number two, more importantly, you will gain so much of knowledge. Okay, so this is a humble request to you. This needs to be told to you well in the beginning of the classes, so that not just for SFM, but you change your overall perspective. These are things I think which needs to be told to the students at the basic level, the preliminary stages itself. I don't know whether somebody has told to you or not. If somebody has told to you all these things, then great. But if somebody has not told all these things to you, it's my duty, I feel, that I should tell you. It's not that my duty is not just confined to teaching you SFM. My duty is to see you becoming a chartered accountant, not just a chartered accountant, a successful chartered accountant. And I feel very happy to see so many of my students doing so well in life, and they have made some great career. Last time one of our students have got 46th rank, I think. He got, that's not important, he got a 46th rank. He took SFM from me, and he's got a job in Nestle. No, he got a job, I think, in ITC. Okay, and ITC, his package is 22.5 lakhs to start off with. 22.5 lakhs to start off with. Can you believe that? And I am telling you, it's not important that you got to be a rank holder to get into ITC. Even non-rank holders can get a chance in ITC. Their interview rounds are very drilling. They will ask you questions based on your knowledge, and they won't even ask you things from here and there. Whatever you have mentioned in your CV, they will ask you questions from there. They just want to see whatever you have done it with eyes open and your mind open, or you have just done it for the formality's sake. Okay, so I'll keep giving you my small knowledge sharing sessions will be there always. And anyways, support is always there. As I told you, you have my number. You need any kind of support from my end, I'm always available for that. Okay, so these are things which we sidestep, because the folk, I don't know, I feel that's how even the it's a mistake at our end also, that the teaching fraternity has also become like that. they have actually made students puppets, and they have started talking like this, that do this much and you will pass the exam. That's a sin. Being in teaching, that's a sin a faculty can commit, when he or she can tell this to the students that do this much and you will pass the exam. No, we are not here to pass the exam. Passing exam is just a criteria to hit the corporate world, but that is not wholesome in itself. It is only going to get me more embarrassed tomorrow when I am facing people in the corporate, and if I tell them that I studied only this much to pass the exam, but I don't have enough knowledge to talk to you or talk to my clients. That's not how things work, boss. You need to understand that. Let's be very clear about it. Knowledge is power. I have mentioned that so many times on my website, on my Facebook page, on my Insta page, everywhere I mentioned this knowledge power, because I've seen that in my life. Today I have my own equity advisory where we have dealt with more than 500 clients. The InvestorWise. Okay, if you see the beginning of your book, you will find a page on InvestorWise. That's my own practice in equity markets, and that practice is possible only because of this subject. The subject is powerful. There are many people who have made videos on YouTube calling SFM a hollow subject, that the subject does not have very good content and all. I don't believe that. I strongly believe this subject has a lot to offer. There should be a way of teaching this subject, and there should be a way of learning this subject. If both the things are done properly, the subject can bring the best out of you, and you are capable of doing great in your life. Keeping in mind that the subject has only 100 marks of coverage. We are not studying 800 marks of SFM. So coverage has to be limited to some extent. A student cannot be made to study 800 marks of SFM for 100 marks of exam weightage. That's not possible. So all the subjects in your curriculum are very, very powerful. You should know how to learn them. Okay, so coming back to my discussion, I'm sorry for this. Question number 1. So one thing I told you is, you have to find out the interbank market rates. In the interbank market rates, we load the margin and we calculate the retail market rates. Is it always that we have to calculate retail market rates? No. You need not calculate the retail market rates always. Most of the times it is given, but sometimes you have to be careful with the language. If interbank market rates are given, then yes, you will have to calculate the retail market rates. Okay, let's look at question number 1. Interbank rates, that is wholesale rate, is 61.30 and 61.70. Buy commission is 0.1%, sell commission is 0.15%. Now we are not sure about whether the buy commission or sell commission are given from bank's perspective or they are given from customer's perspective, because when customer will buy a currency, then bank will sell the currency. So buy for a customer becomes sell for the bank, and so it's completely opposite for the two, right? So if they give me single rate of commission, no, then whether you buy or sell, same commission will apply. Then confusion is not there. But if they give you buy and sell commission separately, then it will make some difference. Okay. Calculate the retail market rate up to 4 decimal places. So we are given the interbank market rates. From interbank market rates, we have to decide on the retail market rates, and for that purpose, buy and sell commission are given. So first thing first, what we have done is we have assumed that commission is given from customer's point of view. Okay, commission is given from customer's point of view. We have assumed this. So for customer, the buy rate is always the ask rate. Customer, the buy rate or buy dollar is always the ask rate, which is 61.70, plus buying commission is 0.1%. So 0.1% we have added to that. Okay, when you buy from the bank, you will pay the interbank market rate plus the commission will be added to it, because when you're buying, you will end up paying a little extra. Correct? No? Similarly, when you are selling to the bank, when you sell at a bid rate, because you always sell at a lower rate is bid rate. So you sell at bid rate minus the commission in this case, because when you sell, you will get from the bank 61.30, but from 61.30, bank will reduce its commission. That is the exchange commission will be reduced. Students make mistakes in this, guys. They have a tendency to always add commission. You can't add commission when you are getting something from the bank. So remember it, it's very simple. When you buy, ask rate will apply and commission is added. When you sell, bid rate will apply and commission is subtracted from that. Okay, please remember that. So like this we calculated the bid and ask rate in retail market. Okay, I hope this is clear. If you read this note which I have given below that, generally single rate of exchange commission is given. If single rate of exchange commission is given, that is good for us, because then there is no confusion whether this is for buying or this is for selling. However, if the buy and sell commissions are different, it will be safe for us to write an assumption, like we have written in the above sum, an assumption that we assume that rates are given from customer's point of view. Further, students often get confused whether to add or subtract the commission. Just remember, if we buy the base currency, we will pay ask rate, plus in this case bank will add its commission, that is bank will charge more. Okay, and if we sell the base currency, if we are selling the base currency, we will get the bid rate, that is minus the bank will deduct its commission, that is bank will pay customer less. Okay, so think like this: buy base currency is ask rate plus commission, sell base currency is bid rate minus commission. Just remember this: buy base currency is ask rate plus commission and sell base currency is bid rate minus commission. Okay, now when I start with my next part, first let me explain you what difficulty is there. Let me explain that to you. What is the difficulty? Difficulty is, suppose you have $50,000, rupee per dollar is 60. If I ask you how much rupee will you get on conversion, if I ask you how much rupee will you get on conversion, what is your answer? It's very simple. You will say, sir, 50,000 into 60, that is the amount of rupee you will get. Correct? No? From dollars, if you convert into rupee, obviously everybody knows that by giving dollars you will get lot of rupees, so for that you should multiply. Suppose this is your quotation. Dollar per rupee is 0.017. You have rupees 50,000. How much dollars will you get on conversion? Will I multiply? Answer is no, I will not multiply. Dollar per rupee is given, rupee 50,000 is there in hand. Will I divide or will I multiply? Think about it. But sir, when I converted from dollars to rupee, I multiplied. No, so from rupee to dollars we will not multiply, we will divide. Think about it. Will we divide or will we multiply? If we divide, you understand what answer we will get. We will get 50,000 divided by 0.017. Let's do it. Let's do the wrong thing first to understand. If I do 50,000 divided by 0.017, I get 2941176, which obviously I know is incorrect, because by giving 50,000 rupees, we can't get so much of dollars, 29,41,176 dollars. If we get so much dollars, first thing we will do is we'll go for a US trip. Correct? No. So obviously we won't get so much of dollars on conversion. So which means I have made a mistake in my computation. So what I should have done, for getting dollars, I need to multiply. Because what you have in your mind is that for conversion, sir, I should do something that I get less answer. Because by giving rupee, I will get less dollars. So if I do 50,000 into 0.017, let's do that and see how much we're getting. 50,000 into 0.017, then I'm getting $850. Yeah, now it seems correct. Now it seems correct. Yeah, by giving 50,000 rupees, you will get only $850. That still sounds correct. So depending on what you intend to get, you can see whether you need to multiply or divide. Let's take one more example. Let me make you understand where you will face problems. Dollar per pound is 1.2125. Dollar needed for pound should be greater than 1. Guys, we know that, right? We discussed yesterday. Dollar is weaker compared to pound. So dollar needed for pound should be greater than 1. This is my base currency. Correct? No? Pound is the base currency. Dollar needed for pound should be greater than 1. If you have $50,000 in hand, how much pound you will get? That's the question. Now again, if you are logically thinking, you will say, sir, by giving $50,000 you will get less pound. Correct? No. By giving dollars you will get less pound. So to get the answer, sir, we should not multiply, because if I multiply I'll get more than 50,000. I should divide. Some of you might have started getting confused, but if you are thinking logically, then you are able to give answers. At least till now you should be able to give answers, because you know the currencies and you know by giving this currency should I get more of the other currency or less of the other currency, depending on which one is stronger, which one is weaker. If I give $50,000, under no circumstances I can get more than 50,000 pound. I should get less than that, and to get less I should divide, not multiply. If I multiply with something greater than 1, I will get more amount in hand. Clear? No, guys? Let's see one more example. Singapore dollars per dollar is 1.1250. You have Singapore dollars 1 lakh. How much US dollars will you get on conversion? Now in this case you can't even apply your logics, because you don't even know which one is stronger. But now again, if you're thinking logically, you know base currency is generally written in the denominator, assuming it is price of US dollars, and some of you might even practically know that US dollar is stronger than Singapore dollar. Some of you might know, but I can't expect all my students to know this, because this is not a GK class, right? This is not, we are preparing for IAS exam, and for GK subject you know all the currency quotations of the globe. It's not possible. But some of you would know this, that Singapore dollar is weak compared to US dollar. So Singapore dollar, listen to me carefully, Singapore dollar needed for US dollar, Singapore dollar needed for US dollar should be greater than 1. That is satisfied. If I have Singapore dollar 1 lakh in hand, I will get less US dollars on conversion, and to get less we should divide. So US dollars answer will be 1 lakh divided by 1.1250. When I tell you that I expect all my students to score 25 out of 25 in Forex, I can't risk everything based on your logical deductions. You can't deduce everything by applying your logics. I mean, if you do it, it's good. I gave you 4 examples where I've given all the answers based on logics. If you have this currency, you will get less of this currency. To get less, you should multiply, divide. That you see. That you can always do. But to ensure that nobody makes a mistake in exam, what we do is, we have a very unique way of studying this topic. What we do is, we introduce something called as rules of conversion. And I will teach you certain rules. And they are very, very simple. There are just 2 rules to do in 2 cases. 2 rules are there. If you learn the rules, irrespective of the currency which they have given, it does not matter. You will always get a correct answer. Always. You will always get a correct answer. I assure you of that. Okay. So if somebody can apply logics, then last 4 examples I did know, guys. You just do those examples and you try to apply your logics, and accordingly you can do all the sums in exam also. But for somebody who does not like applying too much of logics, or does not want to take risk in exam and want to play it safe, it's better you go with these rules, and 100% I guarantee you pick up any sum, you will always get a correct answer. Okay, let's read the rules. The most challenging part in Forex is to get a strong grip of the mechanism used for converting from one currency to another. However, once this is under control, believe me, Forex will become a cakewalk for you. Yes, almost every sum of Forex will have some application of rules, and if you know how to apply the rules properly, you will find this chapter to be under your grip. Okay, for this purpose, we divide the discussion into two cases. Case 1 we are doing where only single quotation is given, like this: A oblique B is equal to X. One rate is given, not two rates, no bid ask rates, only one rate is given. A oblique B is equal to X. Where B is base currency, and after that I have written a line which is very important, guys. That is the only requirement before applying the rules. Always base currency to be taken in denominator. Always base currency is to be taken in denominator. Okay, now I am writing the rules. Rule number 1. If amount of B is given, bracket base currency, and we need to get answer in terms of price currency, amount of base currency is given and you want to convert it into price currency. Then we always multiply. We always multiply. Base currency amount is given, you need to get answer in terms of price currency, we will always multiply. Okay, rule number 2. If amount of A, that is price currency, is given, and we want answer in terms of B, base currency, and we want answer in terms of B, bracket base currency, we will always divide. Can these rules be applied mechanically? Mechanically means without thinking. Answer is yes. That's the good news. You may not think anything and you just apply these rules. What is given and what we need to get, depending on that you can apply the rules. Very simple. But before you apply the rules, you just need to remember one thing. Like I told you, you need to make sure that base currency should be in the denominator. That you need to ensure, guys, and once you do that, then you can simply apply the rules. Base currency to price currency, multiply. Price currency to base currency, you divide. Okay, let's see the application. We will see question number 2. The following spot rates are observed in the foreign currency market. Britain pound. So look at the quotation, how the quotation is given. Foreign currency per US dollars. Foreign currency per US dollars. So first one is Britain pound per US dollar, which is 0.62. Netherlands guilders per US dollar is 1.90. Sweden kroner per dollar is 6.40. Switzerland franc per dollar is 1.50. Italian lira per dollar is 1300 and Japanese yen per dollar is 140. Sometimes institute might give you quotations which are not even relevant now, like Italian lira. There is no currency as lira now. In Italy they follow euros itself. Okay, but anyways, institute might give you some quotations like that, does not matter. Okay, don't challenge them, just do what they have told. Okay, so in this case, first I need to make sure that the dollar which is given in the denominator, we need to make sure that that is the base currency. How do I make sure? If you look at the first quotation, guys, it is pound per dollar. Pound per dollar is 0.62. Pound per dollar is 0.62. You already know this, that pound is stronger than dollar, and accordingly pound needed for dollar should be less than 1, and that is what is done, which clearly suggests it is price of dollar, that is dollar is the base currency and pound is the price currency. Once you see dollar is the base currency, then dollar will be the base currency for all the remaining quotations also. Institute has this tendency within a sum. If base currency is given in the denominator, then it will be given in the denominator for all the remaining quotations, which means in this case base currency is fixed, the denominator is fixed as dollar, so dollar is the base currency in all the quotations. Okay, if in one sum 3 quotations are given and from the first quotation you understand base currency is in the denominator, then for second and third quotation also base currency will be in the denominator. You need not check it every time. This line which I have written, base currency should be in the denominator, needs to be checked only once. You need not check for all the quotations in a given sum. Okay, so from, I'll make you write all these things. From pound and dollar quotation we understand base currency is dollar, which is given in the denominator, so we are okay with that. Now they are asking us certain questions. On the basis of this information, compute to the nearest second decimal the number of British pound that can be acquired for $100. See what is given, guys, dollar is given. From dollar we need to go to the pound. From base currency to price currency, the first case is base currency to price currency. So what we will do, we will multiply first case. Okay, first case base currency to price currency, we will multiply. Even if logically I know I should multiply, because by giving $100 I will get less than 100 pound. So first case I will get 100 into 0.62, which is 62 pounds, and that sounds correct also logically, because by giving dollars you should get less pound. If somebody by mistake divides also, you forget the rules and you divide also by mistake, does not matter, because by looking at your final answer you will know that I have made a mistake. Second case, they have given you dollars that 50 Dutch guilders will buy. Dutch guilder in your quotation is price currency. From price currency to base currency, if you go, you divide. Applying the rules, you divide when you're going from price currency to base currency. Swedish krona that can be acquired for $40. Again, dollar is given, that is my base currency. From base currency to price currency, if I go, I multiply. Clear? We'll write the answers later on. Just understand, guys, right now I'll make you write the answer. Dollars that 200 Swiss franc can buy. Swiss franc is the price currency. From price currency, if we go to the base currency, we divide. Italian lira that can be acquired for $10. Dollar is given, which is base currency. From base currency to price currency, if we go, we will multiply. And last is Japanese yen, which is price currency. From Japanese yen to dollars, price currency to base currency, is again divide. So basically what I'm trying to show you in this problem, this I think is a part of your study module, new syllabus, old syllabus, both. Okay, this is a part of your study module, and in this case what I'm trying to prove to you is, whether you know the currency quotations or not, it does not matter. Whether you have heard about a particular currency or not, it does not matter. If as long as you know your rules, you will be able to do it, provided you just take care of one thing. What is that one thing? Base currency should be given in the denominator. Okay, now what you will do is, there is no space given for solving this question. Obviously you will pick up your notebook. Listen, guys, very clearly. You should maintain a classmate or any other company, it's okay. Ideally classmate hard binding notebooks are very good. because they survive for 2, 3, 4 years also. Nothing will happen to them. So you can buy a nice classmate notebook, maybe 6 size or 8 size notebook. You can buy a long notebook with single line notebooks, okay, because that is how your exam paper will be. Maintain a nice notebook for all the subjects. Don't just pick up some diary and start writing, guys. If you maintain your notes properly, trust me, minimum 50% more interest will develop for the subject, because you're maintaining your notebooks properly. Okay, these are basic things, but please follow them. Even when you're going for live classes to some, so I get so many students, and I see some of them writing in sheets of papers and all those things. How will you retain them with you for a long time? Okay, so please don't do all those things. These are things we don't expect at CA final level. Maintain a nice notebook. Use 2-color pen. Whenever I say something important, note it down in a different color pen. Obviously in exam you're supposed to use only 1-color pen, single color pen, but at least here you can use 2-color pen, and you can maintain some highlight some points which I am saying are important. Because right now you're taking classes, when you will pick up your notebook maybe after 6 months, 8 months, depending on your exams, and that point of time, notes are going to play the role of a virtual faculty for you. So your notes have to be maintained very properly. Okay, so pick up your notebook and let's write the solution to this question. Let's write, guys. Looking at pound per dollar quotation, please write, looking at pound per dollar quotation. Looking at pound per dollar quotation, we understand it is price of dollar expressed in terms of pound. We understand it is price of dollar expressed in terms of pound. It is price of dollar expressed in terms of pound. That is, dollar is the base currency. That is, dollar is the base currency. Dollar is the base currency. Bracket denominator. What is important is that denominator should be the base currency. Bracket denominator. Hence for, after full stop, hence for remaining quotations 2, base currency is in the denominator. For remaining quotations 2, base currency is in the denominator. Hence for remaining quotations 2, base currency is in the denominator. Okay, let's write point number A. British pound that can be acquired. British pound that can be acquired is equal to 100 into 0.62. 100 into 0.62. British pound that can be acquired is equal to 100 into 0.62, which is equal to 62. Next, B. Dollars that 50 Dutch guilders will buy. Dollars that 50 Dutch guilders will buy is equal to 50 divided by 1.90. 50 divided by 1.90. We'll get 26.32. 26.32. C. Swedish krona that can be acquired. Swedish krona that can be acquired. 40 into 6.40. 40 into 6.40. This 256 you will get. 40 into 6.40, 256. Next, dollars that 200 Swiss franc can buy. Dollars that 200 Swiss franc can buy. 200 divided by 1.5. 200 divided by 1.5. 133.33 you will get. 133.33. Next, Italian lira that can be acquired. Italian lira that can be acquired. 1300 into 10. 1300 into 10 is 13,000. And last, dollars that 1000 Japanese yen will buy. Dollars that 1000 Japanese yen will buy. 1000 divided by 140. 1000 divided by 140, which will give you 7.14. 7.14. Guys, I hope you have understood this. Okay, the whole idea of making you do this sum is to make you understand that rules of conversion can be applied very easily without knowing which currency is stronger, which currency is weaker. Will I get more in hand, less in hand? Apply logics wherever you want to. If you know the currency quotations, you can apply logics and find out, like I explained it to you for pound and dollars. But to get marks in exam, we need sure short strategy, and this is a sure short strategy. Okay, what I want you to do is try out question number 3, and then we will discuss question number 3. Please do it, guys. Guys, I hope we are done with this question, and now I'll just discuss the answers with you once. So basically, there is Mr. Abhishek who is planning a foreign trip, which is not at all a great idea with the spread of coronavirus. But let's say Mr. Abhishek plans this trip after the situation is under control, and he's planning a trip to different places, and he has decided a budget for these places like Japan, US, UK, Germany. The budgets are given in foreign currency. Like for Japan, the budget is yen 5 lakhs, US the budget is dollar 15,000, UK the budget is pound 12,500, and Germany the budget is euro 7,500. The exchange rates are given below. Rupee per dollar 66.76. When you look at the first quotation, guys, you understand base currency is in the denominator. So even for the remaining quotations, these are your base currencies. Need not evaluate it too much, because the moment you look at the sum, and I told you, once you understand that in one of the quotations your base currency is in the denominator, for rest of the quotations also base currency will be in the denominator. Let's not evaluate each and every quotation. One quotation is enough for you to check if your base currency is in the denominator. Different quotations are given for different currencies. How much is the total expenditure in rupee terms? They want us to find out the total expenditure in rupee terms. Okay. So rupee expenditure planned. So we calculate it for each of the countries. If we have already done the computations, just look at the numbers which I am calculating. Let us start with Japan. So for Japan, yen 5 lakhs is given. If you look at the quotation, last quotation, yen per rupee is given. Yen amount is given to me. I need to convert it into rupee equivalent. So I will have to divide. So 5 lakhs divide by 3.22. 5 lakhs divide by 3.22, you will get 155,279. Okay, or I'll take it 280, guys. I'll take it 280. Okay, I'm writing the round figures. 155,280 is my budget in Japan. One more thing I want you to focus here is that if you look at the quotations, the first quotation rupee is the price currency, second quotation rupee is the base currency, third quotation rupee is the price currency, fourth quotation rupee is the base currency. Some students asked me, how in a sum once rupee is the price currency and once rupee is the base currency? I say, why it is not possible? What is it that thing makes you feel that same currency cannot be price currency in one quotation and it can be base currency in the other quotation? Why do you think it is not possible? There's nothing wrong in it, right? They can give you anything in price currency and anything in base currency. We only have one requirement. The requirement is that base currency should be written in the denominator, price currency should be written in the numerator. That is the only requirement we have. I hope you get my point, what I am saying. Please understand that very carefully. Don't have any confusions and don't learn things which I did not teach you, please. I just told you one thing, that you got to ensure that base currency should always be written in the denominator, number one. Number two, if in one quotation base currency is given in the denominator, then for the remaining quotations also base currency will be in the denominator. That's the only thing I told you. Correct? Number one. Number two, what I want you to do is I want you to focus on quotation number 3 and 4. Quotation number 3 and 4. If you please focus on these two quotations, you will find third quotation is rupee per euro. Guys, now you see, let's try to understand and learn certain quotations which I expect my students to know. Rupee per dollar is in the range of 68, 69, 70. Rupee per pound is in the range of 89, 90, 91. That's what we have learned. Rupee per euro is given as 74, 75, which means rupee per euro is somewhere in between rupee per dollar and rupee per pound. Which means, can I say, if you imagine in your mind, if I ask you which is the strongest currency, you will say pound, then euro, then dollar, then rupee. That sequence is making sense. Pound, euro, dollar, rupee. Okay, and then after that, if you look at the last quotation, you see it is yen per rupee. That is yen needed for rupee, where rupee is the base currency. Yen needed for rupees 3.22, which means yen is weaker compared to rupee. Practically it is not 3.22, it is 1 point something, but okay, sometime it would have been 3.22. What we need to understand is that yen is weaker than rupee. So the common currencies in descending order of value, if I imagine in my mind, I will start with pound, then euro, then dollar, then we have rupee, and then we have yen. Correct? No? Pound, euro, dollar, rupee, and yen. These are the quotations. Okay. Now coming back to the sum. First case I got 155 280. Next is US. US is dollar 15,000 is given. Look at the quotation number 1, rupee per dollar. Dollar is the base currency. From base currency to price currency is multiply. So this is 15,000 into 66.76. 15,000 into 66.76. This is 10 lakhs 1,400. 10 lakhs 1,400. Next is UK. UK is 12,500 pound. If you look at the quotation, it's the second quotation, pound per rupee, from price currency to base currency. So 12,500 divided by 0.0115. 12,500 divided by 0.0115. You get 10 lakhs 86,957. And last is Germany. For Germany, we have euro 7,500, rupee per euro. Multiplication we have to do, guys. 74.325. 7,500 into 74.325. You get 557,438. 557,438. Let's do the total. 155,280. 10 lakh 1,400. We get 28 lakhs 1,075. 28 lakhs 1,075. That's the answer we should get. Okay, if you have done some exact numbers, if you have taken, guys, then that is better. Okay, I generally don't write exact numbers because small decimal fluctuations will be there, then students start troubling me. I was getting 51, 0.51, you have written 0.52, and so on and so forth. So I write the round numbers. Okay, this is your answer. I hope most of you got it, guys. Now I'm not starting with case 2 right now, because first I want to discuss the framework of equity markets in India, which is very, very important for you. Only then you can probably imagine the scenario. Okay, otherwise it becomes very difficult for you to understand how things work in real life. So only we have discussed rule number case number 1, and we will continue with case 2 in the next class. Okay, case number 1 we have discussed, which is A oblique B is equal to X. That is, single rate quotations are given where B is the base currency, and you should write base currency always in the denominator. Two rules are there, guys. Base currency is given, you want to convert into price currency, you got to multiply. Price currency is given, you want to get answer in terms of base currency, you got to divide. Two things only we have discussed. Now I am coming to the framework of Indian equity markets. Okay, just understand, you need not take it down. Okay, understanding is important, because these are things which you will deal with practically. There is nothing like you have to learn or something. You, with every day we talk so much about it that you will understand. So who is sitting on top? SEBI is sitting on the top. SEBI is the regulator, right? The regulator is SEBI. We did it in IPCC. SEBI is a watchdog of Indian equity markets. Okay, so SEBI is the regulator. Now you understand, whenever a company, in direct text language we call it as closely held company, a closely held company, that is a private company, wants to offer its share to the public, the first thing it will do is it will get a listing. And in India, the companies will get its shares listed on BSE and NSE. Some might list only on one exchange, but generally they will list on two exchanges, that is BSE, Bombay Stock Exchange, and NSE, National Stock Exchange. Two exchange, the shares will generally list. Okay. Now what happens is, once the share is listed on these two exchange, then shares are available for trading, where public can also participate in trading of the shares. So if you want to buy or sell shares, you can do it through the exchange. But now the problem is that SEBI, the regulator, has put so many regulations that BSE and NSE directly will not indulge in trading of shares. With a population of 1.3 to 1.4 billion, it is not possible for BSE and NSE to do the trading by itself. For every call, they will not be able to attend and execute your orders. So what they did, they have issued trade license to different brokerage houses. These trade license can be purchased by a brokerage house on fulfilling certain conditions. Those conditions we are not interested in. We are not doing CS right now. We are not looking into the compliance part. What we know is BSE and NSE for trading purposes will issue a trade license, and this trade license can be purchased by different brokerage house. Some examples I am giving you, like we have Angel Broking, we have Edelweiss, we have Motilal Oswal, we have Zerodha. These are some of the companies who have purchased the trading license from BSE and NSE. That is, they got a trading platform. Company got its share listed on BSE and NSE. BSE and NSE needs to fulfill all the regulations which are required by SEBI. There are different types of regulations that companies need to report about their annual reports. Company need to give their audited PL balance sheets. Company, if they are declaring any dividends, they should report BSE and NSE about it. Company, if they are doing any kind of defaults, BSE and NSE is supposed to report to SEBI about it. So there are a lot of regulations which BSE and NSE have to look for in different companies which are listed on BSE and NSE, and there are thousands of companies which have listed their stocks on BSE and NSE. When a closely held company wants to make its share available for public trading, they will have to get the shares listed on a recognized stock exchange. BSE and NSE is busy with the listing and compliance part. So the trading part, they have outsourced it by charging a fee. The fee is not less, mind you. If you want to buy that trading license, you end up paying in crores. So these are the companies, some companies name I have given. There are thousands of other companies where also SBI has their trading facilities are there in SBI. ICICI also there are trading facilities. HDFC also trading facilities are there. Kotak also there are trading facilities. There are so many companies. I have given you a list of few names. With these trading license holders, a trading platform is available. So whenever you want to do trading, you means a retail customer wants to do trading, you will have to approach one of these brokerage houses. So let us say we approach Angel Broking. Now Angel Broking will have its head office in one of the cities, but it will have its franchisee in different cities, and some cases they might have more than one franchisee in the same city. Like if I'm talking about Bangalore, they might have one franchisee of Angel Broking in Banshankari, and they might have another franchisee in Basveshwar Nagar. These are two different places. So they may in metropolitans or in big cities, they may not have only one franchisee. They might give franchisee to two different corners of the city. Similarly, in Mumbai, maybe one franchisee is in Ghatkopar and the other franchisee is in Charni Road. It is possible. They might have multiple franchisees in the same city. This franchisee will send its agent. So suppose if I just on the website of angel broking, I dropped a message that I want to trade in shares and I want to open my account. So for opening an account, first an agent from one of the franchisees of angel broking will come to your house, and they require certain documents like your Aadhaar card, okay, like your PAN card, and they will take a check from you, check or maybe an online transfer you can do, NEFT you can do, and they will ask you to fill a form in which there is a power of attorney, which you are signing a power of attorney. It's not a power of attorney that you are giving powers to do your business to them, no, but power of attorney is limited to giving them the powers to execute a buy and sell order on your behalf. Okay guys, please listen to this carefully. This is one time learning, and then throughout your life anybody who teaches you this will charge you for this. Okay, so you will get a form. You need to fill in that form in which you give your basic details, and you also have to provide a power of attorney. You underwrite that, okay, on my behalf I am giving angel broking a right to execute shares on my behalf, so they will do the trading on your behalf. Okay, so Aadhaar card, PAN card, check copy, NEFT transfers can be done, and a form. Within 24 hours to 48 hours, 24 to 48 hours, they will open your account. Okay, now once angel broking will open your account will, mainly the shares which you hold, they are held in a demat account. That's called a demat account of a client. Dematerialized account means shares that we buy now, there is no physical holding of shares. What we do is we will have a dematerialized holding of shares, that is electronic holding is there. Okay, there is a dematerialized holding of shares. That demat account will give you the details of all these shares which you are holding. So now trading has become very transparent. Every time you buy these shares, it will reflect in your demat account. So you can directly go and check your demat account, and even if you don't know how to check your demat account, every day your exchange, every day your brokerage house is supposed to give you a contract note. That contract note generally comes in the evening at around 5:36 p.m. That contract note will give you details of all the shares which you are holding in your account. I hope I am making sense, guys. Okay, so in your demat account, the list of shares that you're holding you will find, plus they will also show you your fund balance. You will find the details of fund balance. You will find all the profits and losses you have made. Profit and loss statement is available, idle funds available, funds invested available, what is the margin that you are using for trading in shares. All these details are available once you go into the angel broking application, or you go to their website and you put in your user ID and password. So basically what they do is they give you a unique user ID and a password. You can put this user ID and password and you can start doing trading of shares. Okay, so this is how you open your demat account. Once successfully you open a demat account, you will transfer some funds in it, and once you put the funds in it, then you can start trading in shares. I hope I am making sense, guys. Okay, so let us discuss the framework once again, then slowly we will proceed with it. Who is on top, guys? SEBI is on the top. They are the watchdog of the equity markets. They are the regulators. After that, any company which is a closely held company, if they want to get their shares listed, the first thing they got to do is they got to do a listing on either BSE or NSE. BSE or NSE listing of shares is to be done. BSE and NSE is so busy with listing and compliance part that they could not directly execute the orders. So what they did, they introduced some trading license partners who will have a trading platform. Through them you can do trading in shares. So we have some brokerage houses like Angel Broking, Edelweiss, Motilal Oswal, Zerodha, who will have their head office in one of the cities, but then they will have franchises spread all across the country. With one of the franchisees you will get in touch and you will open your demat account. That's what we call it, demat account we will open. For opening a demat account you will have to give some documents like Aadhaar card, PAN card, and you will have to issue a check, because obviously you will open an account, so you will need to give a check. That depends how much you want to give, 5,000, 10,000, 50,000, that is up to you depending on how much trading you want to do in shares. And then you give a power of attorney to them. Once you do this, within 24 to 48 hours they will open an account for you. You are given your user ID and password. Once you give your user ID and password, once you get your user ID and password, you will have an access to the account. You can log into your account and carry out transactions directly, or you can do the transactions through relationship manager. You will be given a number. You can call upon that number and you can tell that I want to trade in this particular share and please do the buying or selling on my behalf. As you keep buying shares, your demat account will change and your fund balance will also change. As you keep selling your shares, your profit and loss statements will also change. For whatever transactions you do, a contract note is issued to you at the end of a trading day. Every day a contract note will be issued. Now talking about the markets, I hope the framework is clear to you guys. Talking about the markets are open from Monday to Friday unless there is a national holiday. Monday to Friday markets are open, and markets are open from 9 a.m. to 3:30 p.m. These are the trading hours. 9 a.m. to 3:30 p.m. you can do the trading in shares, but for retail investors like you and me, trading will start from 9:15 a.m. That is first 15 minutes is blocked for FII or DII or hedge funds or mutual funds. They are the ones who are allowed to do trading in first 15 minutes. So mostly the block deals will happen in first 15 minutes, where these people will participate and they will do the block deals. Block deals means they will buy or sell shares in lakhs and price fluctuations will be very high. But after that we can participate in the market, we can do the buying and selling. Okay, so I hope this part is clear to you. So like I'll give you practical example. I have my demat account in Angel Broking. Okay, and this is the Angel Broking app. I have opened it, Angel Broking app. So I don't know if I'm logged in. Yeah, I'm logged in into this. So if I go to the portfolio, just give me a 1 second. I'll yeah, we have internet now. So I go to my portfolio, and this is like I get all the details of the stocks which I'm holding in my portfolio. I don't do a lot of trading in shares, but this is my portfolio of shares which I'm holding at this point of time. Okay, these are the shares which I'm holding in my portfolio at this point of time. These are the mutual funds. If you have any mutual funds, that also you can find here. Okay, then you have bonds, investments. If you have done any F&O trading, that will also come here. Right now my all positions are running in losses. And then if you are dealing in commodities, currency, all these details you can find here. So if I go to the dashboard, okay, I'll show you one active trading. Okay, if I go to the dashboard and I find a quotation, let's say if I try to find a quotation for HCL Tech. Okay, we find for HCL Tech. HCL Tech, if you see guys, you find there that we have a price available in both NSE and in BSE. NSE price is 430 right now. I click on NSE. Okay, if I click on NSE, you see that bull. If you see that diagram properly, there is a bull inside that. And bull means you are expecting upside. I told you bear means you're expecting downside. So there is a bull, there is a bear. So bull means obviously if you expect upside you will buy the share, if you expect a downside you will sell the share. Let us say that in this case we are expecting, they're asking for my password, which I hope you haven't seen. Okay, oh my god. Why don't I remember my password? I've forgotten my password, guys. How is that possible? Okay, I'll try one more time. Give me a second, please. I'm so sorry for this. Actually, I'll do trading through my mobile phone, right? And we don't have to log in every day. If you stay logged in, then you will be logged in all the time. Okay, try one last combination. Okay, it happened, I think. Do it later. Okay, guys, so sorry for the inconvenience. Okay, so what we were discussing is that I go to the dashboard and I look for the quotation of HCL Tech. I click on HCL Tech. I find the price in NSE and BSE. See, the price has changed. This is called execution risk. 430 was the price when I wanted to buy. Now the price has become 432. This is called execution risk. By the time you execute your orders, it becomes late. So buy. See, now if you look at this, I want to buy the shares of HCL Tech right now, and let's say I put the quantity here. I put 10 shares that I want to buy 10 shares right now, and I can put the price at which I want to buy. There are two types of orders you can place. One is a limit order, one is a market order. Can you see that, guys? One is a limit order, one is a market order. If I put a limit order, then I will define the price at which I want to buy. Okay, so right now the price is showing as 431.05, 431.25. Do you see that price is changing on real time basis? Every second it is changing. See, it is now 430.75. I hope you can see that on the screen. Now the price is 430.75, 430.10. So limit order, I will put the price at which I want to buy. So let's say I put the price as 430. Okay, although the seller is sitting at 430.90 now, if you see, but I am putting the order at 430. Done, and I submit. Okay, now the price has become 431.70. Confirmed. I put my order. I put a buy order at 430, but the seller was sitting at 431.70. Obviously, I feel that order would not have executed. It would have been showing as pending. Let's see. I go to the order status and it shows me pending. Can you see that, guys? The order is showing as pending, because the buyer should place a buy order at a price at which seller is willing to give, or some new seller should come at 430 and give me the share. Let's be very clear about how demand supply works. I have a demand at 430, but supply is happening at 431.70. I can't get the share, right? What I can do is I can click on this and I can modify my order. So right now the price has, if you see the top again, the price has become 432. So what I'm doing is I'm changing the price now to 431.80. Let's just play around with this. 431. Oh, it has become 432.40 now. You see that? 432.75. You see that? So let us do one thing. We'll not waste a lot of time on this. What I will do is I'll put 432.50. That's the last price I can offer to pay. I put a confirm order, and now order status is executed. I got the shares at 432.50, which means 10 shares are purchased in my account for HCL Tech. This is live trading I have shown you guys. Okay, this is how. So now things have become much more easy and simpler. You need not call up the relationship manager and do the trading. You can straight away take your positions by yourself. Now this is executed, guys. Okay, then there is something called stop loss. If you think you don't want to bear a loss beyond a point, you can always put a stop loss. So this is where I can put a stop loss, and this is a robo order. Okay, robo order means that automatically they will square off, or I can put a stop loss over here and I can decide what price I want to sell my stock, which means from 432 I have taken a buy position. If price goes down at 410, maybe I can put my stop loss. If I want at 410, automatically they will square off my position, means they will sell the share, 10 shares. Again, if I go to the trade and if I go to my positions, trade and my positions, the first one, if you see, I purchased 10 shares. The first one, 10 shares I purchased at 432.50. Now the current market price is 432.85. Can you see that? Right hand side, the price is 432.85, which means below that 3.50 is written. That 3.50 is my profit. That's the profit I am making on 10 shares right now. That will show me what is my profit or loss during the day. Okay, this is today's So this is my situation right now. I purchased 10 shares at 432.50. Right now the price is 433, which means I'm making a total profit of 5 rupees, 3 rupees, like that. It is real time trading happens, so prices will change on real time basis, guys. I hope this is clear to you. This would serve your purpose, and this would give you a lot of clarity on how trading is happening. Real time basis, pure demand supply. You put a order, it might get executed, it may not get executed, depends. Okay, at the bottom, if you see, there is something written just above the ticker. If you see, there is a word written MTM, that is mark to market. Today, as based on change in price, how much is my total profit? That is 3 rupees is my profit today. As price will change, if price becomes 440, my profit will go up. If price becomes 420, I will be having MTM loss. M to M, MTM we say, mark to market. Depending on the current market price, on your position, whether you have a profit or loss, that you can find out. Okay, guys, apart from this, I told you one more thing, that in India, you have two index. Coming back to my discussion, BSE has maintained an index that is called as Sensex, and NSE has maintained an index that is called as Nifty. Basically, the idea is, if I want to get an overall picture about whether markets today have gone up or come down, then overall markets, whether they are doing good, they are doing bad, we use the index as a parameter to check that. Every company which is an exchange will have an index to give you an overall performance of how the markets are performing. So BSE Sensex is made up of 30 shares. In BSE, Bombay Stock Exchange, large number of shares are listed. Sensex is an index which is created by taking only the top 30 stocks, top 30, the best stocks available. Similarly, Nifty has an index, as an index is made up of 50 stocks. Nifty is made up of 50, so we say Nifty 50 and Sensex is 30. So Sensex will show you the performance of how 30 stocks are performing, and NSE, that is maintains an index called Nifty, and Nifty is made up of top 50 stocks, and Nifty, that's why we say Nifty 50. It is made up of 50 top performing stocks. These index have their own values, which again I will show you what is the value of the index. If I go to the Angel Broking app dashboard, and you see, yeah, if you see this top of the page, this is Nifty right now. If you see the value of Nifty, which is given as 8,380, it is up by 117 points today. That is given plus 117 points. That is for today's trade. And similarly, if I go to Sensex, I find that Sensex is up by 364 points. So suppose I'm taking the class, these are all live figures. You see the figures are changing right now, correct? No. So when I look at these numbers and I see that, okay, Sensex is up by 350 points today and Nifty is up by 112 points. What is the first message I get in my mind? That today market is bullish. Market is on a bull move right now. At least till at this point of time, markets are looking bullish. Not just that, which 50 stocks are there in Nifty? This is the list of the stocks, guys. Adani Port, Asian Paints, Axis Bank, BPCL, like that. You will find a list of exact 50 stocks here. Okay, the exact 50 stocks, and they are given in alphabetical order starting with A and ending with Z. Similarly, Sensex, if I click and I find that there are 30 stocks over here, again starting with A and ending with U, given in the alphabetical order. Okay, so this is the list of stocks that is forming part of the index. So index is basically a representation of how overall market is performing today, and by looking at index you get an overall idea that today market is whether in a bull phase or it is in a bear phase. Okay, that is the idea you get. One more thing, guys, when Sensex is up does not mean that all the stocks in the index will be up. Like if you look at the list right now in front of you, if you look at Axis Bank, it is showing red downside arrow. You see that? Which means Axis Bank today is down. Asian Paint is also down now. Now suddenly it has become down. If you see, it is only down today by 0.75, which means compared to yesterday's closing, today it is down. Are you getting my point, what I'm saying? Axis Bank now, see, it is red in color, but Bajaj Auto is going up, that is blue color given, it's going up compared to yesterday's closing. So when the overall index is up, it does not mean that all the stocks in the index are going up. It means overall index is up, that is why it is showing upside value. And if overall stocks are going down on an average, then it will show downside value. That is how you have to see this. Okay, I hope this is clear, guys. So Sensex and Nifty are the two index which are maintained by BSE and NSE, and they will give you a good idea about how markets are performing on a given day. If you come back and you see a note here on page 2, this is on page 2, guys. In the KP remarks part, if you see page number 2, Sensex and Nifty are the two most recognized equity index in India, maintained by BSE and NSE respectively. That is, Sensex is maintained by BSE and Nifty is maintained by NSE to reflect the overall health of the Indian equity markets. And then this line is given in the bracket that we will read later on. The index are basically used as a proxy benchmark for the overall performance of the equity markets. They give you an idea about how the overall markets are performing. But I told you again, they give you a good idea about how overall markets are performing on a given day, whether we are having a bullish phase on a given day or a bearish phase. But that does not mean that all the stocks, if Sensex is up in value, that does not mean that all the stocks in the index are doing well. It's not important. Sensex captures the performance of 30 blue chip stocks and Nifty captures the performance of 50 large cap stocks. So Sensex is made up of 30 stocks and Nifty is made up of 50 stocks. Okay, please remember that. So this is how index is created, and the whole idea of creating an index is to give you a representation of how markets are doing on a particular day. Okay, how the Sensex value of if you see, the Sensex value was overall value of Sensex, if you see in this case, is 28,550, 540, and Nifty is 8,400 range. Okay, how that is calculated? They took a base year. From base year, as the stock values kept on changing, so the index value also changed. That is how it is done. Okay, now let's not go too much into details of it. Are the stocks fixed in Sensex and Nifty, that Sensex will have same 30 stocks all the time? No. Exchange has the power. BSE in case of Sensex and NSE in case of Nifty have the power. Anytime if they want, they can remove some stocks and they can add some stocks in the index, depending on how they want to take it. Probably they will try to take stocks which have no compliance issues, they are top performing stocks, their corporate governance is having no problems. Those are the kind of stocks they want to take, because they want to take the best stocks in the index, which gives you a very good representation about the markets. Okay, how much a particular stock will impact the index? If that is a question you ask me, that's a very technical question. The answer is, every stock contributes to the index depending on its market capitalization. The word is called as market capitalization. Market capitalization is number of shares into current market price. For every stock, market capitalization is available. More the market capitalization of a stock, more will be its influence on the index. Okay, more the market capitalization of a stock, more will be its influence on the index. For every stock, market capitalization is available. Like I'll show you right now. Give me a second, guys. We have data for everything. Okay, 1 second. Okay, so this is Reliance, guys, in front of you. You see that Reliance is there in front of you. That is the price of Reliance. This is a picture taken earlier. This was a picture clicked on 16th of December 2019 when the price was 1566. Now the price is much lower. Okay, if you go down and you see the information, you find the market capitalization of the stock. This is the market capitalization, guys. This is the market capitalization. You see that? The figure market capitalization. Standalone statistics, you see that 9,93,100 crores. 9,93,100 crores is the market capitalization of Reliance. Similarly, you can find it for other stocks, like this is HDFC, guys. HDFC, okay. And what is the market capitalization for HDFC? It is, if you look at the bottom, it is statistics. If I open the statistics, guys, it is 4,10,497 crores. That is the market capitalization for HDFC. Okay, like that the information is available for all the stocks. So more the market capitalization for a stock, more the stock will impact the index. Okay, I hope you have understood things, and these are advanced level discussions which only with passage of time, guys, you can learn. And so you need to be slow with this. Okay, you can't expect to learn everything in one go. I'll explain certain things today, then again I will explain, again I will explain. By the time we do forex and derivatives itself, I will explain this to you 25 odd times. By that time you will have 100% retention in your mind. So tomorrow we will start with forex, and tomorrow again I will discuss one important thing with you, that how and what are the different types of investors and traders in the market, and how they can take advantage of the market leverages which are given. But before that, it's important that this framework is crystal clear in your mind. So we have to go step by step. Next day I will teach you some part of forex, and then we will also learn how trading is done in markets, okay, and what type of investors and traders are available in the market. Whatever I've done, just revise it, and then I'm stopping it here, otherwise it will get too heavy for you. Just revise whatever I've done, revise the rules of conversion, because rules of conversion with two quotations is very much linked to rules of conversion with single quotation. So please revise your stuff, and then we will discuss further in our next class. Till then, thank you guys, bye, God bless.